So good afternoon, everyone, and welcome to Sage's webinar, all about that last minute preparation, or is it just get the job done for self-assessment, as well as, let's say, thinking about how do we get ourselves ready for making tax digital for income tax, because really this is primary conversation time with clients, especially when I think probably 50 to 60% of all tax returns probably get filed in the next 6 to 7 weeks. So therefore, while clients are asking you about when is it going to be filed, what's my tax liability, you can start to, let's say, drop the notion that MTD for income tax is happening, and life may be, or actually will be easier if they're using digital record keeping to actually make their self-assessment a little bit better and timely. So this webinar is recorded, so therefore I would encourage you to sit back, watch, learn, listen, and therefore if there's any bits or any slides which you want to take a picture of, you'll get the on-demand version at a later date. But also it's a case of if you've got any questions, we will have some time towards the end. We'll try and give ourselves a few minutes because this isn't an hour-long webinar. This is going to be a nice punchy 40-minute one because we know that your time is precious and therefore the pace will be quite quick. But therefore, if there is any really sort of pertinent questions you would like to ask, I'll be reviewing and maybe sort of put that in throughout the conversation. So when we think about the conversation, what are we talking about today? Well, yes, it is self-assessment. Yes, it is, 6 to 7 weeks until that 31st of January deadline. We could seem to be doing this every year. We think about, let's say, the urgency. We always have a certain number of clients or a lot of clients who are still not showing us with information. What can we do to make it a little bit easier? What have we learned? And also how have practitioners changed the ways of doing the work? But also more importantly, think about how do you get ready for making tax digital. If you've been living under a rock, you may have not actually understood that MTD is now definitely happening, as Rachel Reeves announced and in her little red book at the last or most recent budget. So today I'm joined by Rob Newman from CCM and Samantha Mitcham from SJCM Accountancy. So Rob, just a quick little intro from yourself, please.
Hi, my name's Rob. I'm based in North Manchester, Rochdale. My firm's been going forever according to our website, and you can trace the history of it. But in reality, this version of the firm is since 2012. There's 3 partners. We do just under £3 million of fees. We're a big, small firm. We've got lots and lots of clients, and our average fee is 1,500 quid. So we don't do audit work. We're very much a compliance-based business. And you know, I have all the same issues and things that most of the people on this call will have.
Brilliant. And then from a large small firm to a small micro firm. But Sam, you're not small at all on social media, but a quick explanation of who you are and your experience, please, for those who don't know you.
Yeah, of course, Chris. Thank you very much. So my name's Sam Mitcham. I run a small accountancy firm on the Lancashire-Yorkshire border, SJCM Accountancy. Just realised not a million miles away from Rob, so there we go, almost accountants practice neighbours. So I've been running the firm since 2019. It's now myself and 3 staff members. Yeah,
so just 1 second, I'm just going to share my screen. I seem to have a bit of an issue here. 1 second. I need to make myself a presenter. That would be so much easier, wouldn't it? So bear with me. Anyone would think I've been doing webinars all year, wouldn't they? But there we go. So hopefully the screen can be seen. And this is what the agenda and therefore the really important in terms of the topics for today. So when you think about the topics, let's think about where we are now. So we're in the peak period of self-assessment. And this has been going for the last 25 years or so. We do our best to plan ahead. We think about every February, we're never going to have another January like that again. But actually, we probably won't have another January like that again, or we've only may have 2 more bites of the cherry with it, because when we think about the realities, we're at that point in time. It is December 2024. We have this self-assessment series, and then we have the next one to go, and then we've got this new world, this hybrid world of making tax digital as well as self-assessment as we know it. But also what doesn't escape the matter is the fact that we are business owners ourselves. We're thinking about how to be more profitable, how we can be more efficient, not only in terms of ourselves and our time and making sure our staff work efficiently, but also the fact that our clients are demanding more. And we're always thinking about how to heighten, let's say, the levels of, let's say, client experience and the value that we deliver. So, Sam, from your point of view, I don't know how many self-assessments you've gone through. You've probably gone through 16 or so, but it's a case of, is it getting easier? Is it getting harder? What have you done differently over the last couple of years?
Yeah, so I think self-assessment season always follows the same pattern. At the end of the day, we are in control of that pattern, and I think accountants historically like to pretend that it has to be a certain way, whereas over the last few years, you know, there's been all sorts of weird and wonderfuls on social media telling us how they have all the tax returns done by the middle of the year. I think from a small practitioner point of view, that's not realistic. We are dealing with human beings at the end of the day, and with all the tech and all the chasing and all the best tracking systems in the world, we are still dealing with human beings, some of which have had the same routine and the same patterns longer than I've been in this industry. So I think from my point of view, it's always been the same since running my own practice, Chris, in terms of being realistic with it. We can absolutely make changes, whether that's automated chasers or actually picking up the phone when it gets closer to the end of the year. I know that many practices can put discounts on earlier work coming in. It's not something we've implemented, but absolute respect for that. I understand why practices do that. And in the same vein, engagement stipulate that once you pass a certain point, there will be an increased fee or a surcharge as such if information isn't in. Within my practice this year, we're kind of trying to pretend that the end of December is the end of January. So I'll let you know how that goes if you ask me again in January. But yeah, in terms of what we've changed internally, I think it is all down to organisation. No matter which way you look at it, it's all down to what systems and processes you have in place to know exactly where you're at in a snapshot view, if at all possible, at any given moment. And without that, you're not going to be able to even look at the picture, never mind make changes.
So in terms of that snapshot view, are you ahead or about the same as you were last year? Because I think we're always seeking that incremental improvement. Are you feeling happier with where you are this year?
Yeah, we are ahead this year. I have a full-time accountant now that had only just started at this point last year, whereas he's been with the practice for 12 months now. So that's been a big difference to myself and the practice. So we are ahead of where we were last year. But again, there are certain clients that unless I went and knocked on their door and invited myself in to get that information from, they're never going to bring it in. Unless we did start putting quite hefty fees up and for late incomers, and then who knows what would happen. But at the moment, I feel it's controlled, and for me, it's part of reality that there will always be, or there has always been. Obviously, MTD is going to change it drastically, Chris.
Yeah, and I think those points in terms of it's all about habits, behaviours, and being organised yourselves to cope with, let's say, the whole diverse range of clients that we have. And then from your point of view, as your practice has grown, and as Sam's experienced, you have to delegate work out so you can actually stand back a bit and help, let's say, manage, control, and nurture people in a different direction. It's probably been the best way to actually help manage this period. Now, what have you done differently maybe over the last 12 months or over the last couple of years in terms of your approach to this time of year?
Sorry, is that Sam or myself? Yeah.
Sorry. I was going to say, is he still on me there, Chris? Or are you over to Rob?
I'm going to Rob now. I've gone to Rob now.
I'll be honest, I'd echo an awful lot of what Sam has actually said. I mean, I've done every single self-assessment season from 97 onwards. I'm that old, yeah. And an awful lot of it comes down to the people that's involved in the business, and you can have as many systems as you like and as many things, and I try and use them all and have tried to do that over the years. And I do offer the discount if you come in April, and I do charge more if you come in January. The biggest change this year that we've had is chasing people on WhatsApp, and that has actually made an impact. It's the first time I've done it. I've gone down the approach of putting a system in place for that this year. But even aside from the WhatsApp thing, we've done 9 chasers on email messages. We went into phone calls in November time. It is still lists and people. Practice management software makes a massive difference to it. As of yesterday, I haven't checked today because I check it at 3 o'clock in the afternoon, but as of yesterday, out of the 3,000 tax returns that we were scheduled to do this year, we had 463 still outstanding, and that's with 5 people doing nothing but tax returns. We're still at that state, of which there was 100 and something where we've had no information whatsoever for them. So despite everything else that's put in place, I'm in about the same place. I'm not in front or behind. It's about the same. It's the same stragglers. And as Sam said, unless I turn up on some people's doorsteps which I have done before now on several years, I won't get the information. I know some of them will turn up late and pay the penalties and pay the fines and all the rest of it. But if you don't have the basics of practice management, lists, job tracking, where you up to, you've no hope in even chasing it. And in my practice, we still have to chase hard. We don't put it down to the client's problem and responsibility, because they just won't come.
Yeah, very much true. And I think this is the reality, is the case of when we think where we are now and where we could be in 18 months' time in terms of things, those periods of self-assessment, that workload, it's a case of we have to do something different in terms of how we change how our clients work with us. It's a case of we're changing all the time, we're bringing new pieces of technology, as you said, using WhatsApp in a slightly different way. We're always looking for that sort of extra 1 or 2% to make our lives easier. But again, much of the chasing or the problems are around the client basis, which means that when you think about fast forward into 26, we've got two directions. It's our case of actually do very little to be ready for MTD and have that huge anxiety and workload. We'll start planning ahead and maybe aspirationally actually think about where we can actually flatten out the workload, because that's one of the themes of making tax digital potentially. Yes, we'll still always have the January rush, but actually how can we have, let's say, access to information earlier to actually deliver self-assessment on a more timely basis? So when you think about where we are with MTD, just for a quick recap, just in case you're aware of the details. So it's all about April 2026, when those sole traders and landlords with a combined income of more than £50,000, and income is gross income, that's sales, that's rent received, total value of more than £50,000, they will need to be maintaining records digitally and also filing quarterly to HMRC. Then when we fast forward by another 12 months, it's all about those with, let's say, more than £30,000. So from April 27, they'll have to be maintaining the records digitally. And then the other little bit detail to the recent budget is the fact that it's the aspiration by the end of this Parliament, and who knows when that may be, whether it's 28 or 29, the fact that anyone with more than £20,000 of income will be maintaining or using the rules of making tax digital. But also what we are aware of, that partnerships are now out of scope. So this is a really key fact in terms of maybe unincorporated, but partnerships aren't involved with MTD. And also we're still waiting a few extra details in terms of landlords, because landlords are those tricky creatures. It's the fact that they can be more complex than, let's say, a typical sole trader, and therefore HMRC are thinking about how do we actually ease those rules in terms of record keeping and what needs to be filed. But I think the key thing is that MTD is happening. This is the direction of travel which HMRC is taking. The benefits from, let's say, ourselves is the fact that rather than having multiple sources of income and information, we'll go through one portal from HMRC, which is suck the information from it. But also from taxpayers, it's the fact that probably tax is the largest liability, and the liability they're not aware of until maybe 6 to 9 months after the year end, even they have payments on account, and therefore that's what probably disrupts their cash flow. So when we think about planning for MTD, we need to be sort of resonant the fact that once January's done and dusted, we've done that return on the 7th of February, we'll effectively have less than 300 working days until April 2026. So whether you've got 50 clients or 300 clients who are going to be affected, when you think about the time involved in having a conversation, think about the solutions which they may use, or actually how you're going to get your overall practice ready, the clock is ticking. It's all about actually having a plan in place. So Sam, from your point of view, we've always had that inkling that I think MTD is happening this time around, but also clearly in the budget, having that documented and written, and the fact that HMRC have now extended the, let's say, what those businesses, sole traders, landlords who will be affected, MTD is happening. So what's happened in terms of your direction of planning and your concentration now, and also conversations you may be having with clients now in the next couple of months?
Yeah, I think it has been a difficult subject to raise with clients, because we were at the position before, before MTD was delayed again, where we were talking to clients about this. We took the opportunity to just drop into conversation that it was going to happen. HMRC have now, like you say, Chris, it is now confirmed, but to go to the clients and say MTD is now happening, you do get that natural kickback of, oh, they said that before. We can say until we can carry on and say, no, this time it's really happening. I think until HMRC push out their correspondence to say, we think that you will be in MTD, there are some clients that are definitely not going to be believing it just from us. Luckily, we've heard it on a previous webinar directly from HMRC that they are going to be helping accountants with pushing out that correspondence to clients. And I think the key is to just drop it into conversation wherever you possibly can. You know, we're speaking to the clients that this is going to impact most at this time of year, whether we're just doing their tax return or whether we're reminding them to pay their payment at 31st of January. We do have regular check-in points at this time of year with these clients that are going to be hit with MTD in the first leg. So I think from an internal practice point of view, the most important thing is that client segmentation piece. If we don't know which clients it's going to impact first, we haven't got, you know, any chance of speaking to the right clients at the right point. So the way it needs to look, in my view, is very, very clear. And it doesn't matter if that's an export onto Excel from your practice management and then, you know, a manual selection key code in a certain color, whatever it may be, to have some kind of segmentation list at this point whereby you can look at your client base and say, these are the ones that are going to be in MTD within the first leg, is where the power lies in that conversation point from our point of view. And then I think once we've kind of segmented the client base, it is all about the step-by-step approach with the clients, working out if there's any that don't have a business bank account yet and having that conversation with them. For example, of, do you really want to be paying us? Because it's probably going to be us trawling through your Netflix subscriptions if it's still mixed in with personal. Just one example of things we need to talk to the clients about. And then once we've, you know, discussed that business bank account, then it's got to be moved on to, right, we're going to need you on software. This is your responsibility, or these are the options that we're going to give you. And I think from a servicing the client's point of view, I'm very much looking at it as kind of a three-way process in terms of there will be clients that don't want to do any of this. I know that I'm going to have some clients that go, whatever it is you need to do, please do it for me, and they won't want to get involved. I also know that we'll have a certain amount of clients who are happy to start doing, let's say, sales invoices and purchases on auto entry, whatever it may be themselves, but actually they don't want to be hitting any buttons to submit to HMRC. So that's already two different levels of service that we need to consider. And then there's going to be a third type of client that actually probably will be comfortable doing the quarterly submissions themselves. So that's how I'm kind of looking at it, as you know, it's not just going to be a one size fits all. But again, that means more organisation from our point, because we've then got to segment down what clients are going to be wanting us to do. So it is a really, really huge change. But I think, again, for me, what does it come down to win MTD? It's got to be organisation within the practice.
Brilliant. And as I said, I'll deal with the questions as they come through. So just as confirmation, when I talk about £50,000 gross income, this is turnover, this is sales, this isn't net profit. So for example, you may have a sole trader who is turning over £35,000 in terms of sales, and they may have rental share or rent from a property which is just making up £16,000. And that will keep you over the £50,000 threshold of £51,000. So really understanding your client revenue, your turnover is really important. And in terms of dates, yes, it's from the 6th of April 2026. However, it is the year 24-25, the year we are currently in now, which will be reported on the tax return by the 31st of January 26, which will crystallize whether they're coming into MTD. So HMRC will be delivering communications this year based upon their estimates in terms of which sole traders and landlords may be affected by MTD, but definitely from February and March 2026, based upon what's been submitted, everyone will be receiving correspondence. So it's really important to have conversations with clients. So Rob, you may be a larger firm, you have more clients which will be affected by MTD than Sam, but it's just another scaling thing. It's a case of
I think Sam's been copying my homework. I think she's been absolutely copying my homework, because I've basically done the same approach to it. I mean, the uncertainty around MTD has caused me to, when the whole project of MTD was first announced in 15, 16, whenever it was, I got really excited and talked to loads of clients about it, and felt I got a little bit burnt, because it was like, well, none of that happened, did it? And I've been a bit quieter with the clients around this, waiting to see what actually came out of it. But we in advance, you know, when it became clear earlier this year that it was going to get serious and it was going to come out to it, we did exactly what Sam just said. We took the practice management software, we dumped it onto an Excel spreadsheet, we manually went through that based on gross income, divided people up, and then used the knowledge of the clients from the tax team and the accounts team of is Fred likely to be willing to go onto software? Is he likely to be an Excel spreadsheet guy, or is he just going to give us still a bag of crap that we have to turn into something? I have around about 400 clients that are going to be affected by this out of the 3,000 that we deal with. We have quite a large batch of landlords who are going to end up being caught into these. I reckon there is no more than a handful that will be prepared to go onto software. The bulk of mine are going to fall in 2 and 1 of Sam's thing to it, where 2 is they're willing to do certain amounts of it. They're willing to capture some things onto those. Again, part of our reasoning for putting quite a bit of investment into setting up WhatsApp is using other systems, you can link WhatsApp directly into auto entry, so that your client can actually take a photo of their invoice, their document, and send it to you on WhatsApp, and without them even realizing what's happening, it goes straight into auto entry. And I've already got a lot of people interested and keen on that, and we haven't rolled that out to everybody. We're just kind of talking about it to them. And your stereotypical tradesman in a van is already doing that for us. Any of them we've said to them are quite happy to do that. Click, there's my Costa receipt or whatever, Travis Perkins or whatever else they're doing. I've still got a significant number that we believe are going to be a bin bag. And they're going to turn up, and then that piece then is, how do we get them to turn up regularly with the bin bag? Because ideally we need that. We now don't need it as a bin bag. We need it as a Tesco carrier bag every month, as opposed to once a year in a big bin bag. But the fundamental process is exactly the same. Get that list of your clients, get that the gross income figures that they've got. How many of you got affected by these? Is this a big deal for your practice? From your own knowledge of it within your practice and talking to your teams or however you've got, how many of these are going to be willing to go on A, B, or C version of it?
So I think that's a brilliant segue into our next section, because really, at the end of the day, the way to win and control and manage making tax digital is to really understand your client base, because your clients are your DNA of your practice. It's the ones who are bringing you the work, it's the ones you do the work for, it's the ones who are paying you. So you really need to understand your client base in much detail. And it's not just about the sole traders and the landlords, it's about understanding all of your clients, because if you've got limited company clients, corporate clients, where they are VAT registered or not VAT registered and still bringing you manual records, how can you make them more efficiently? Because if you could create efficiency across your whole base, you'll then have the capacity to deal with MTD yourself. And really, this client segmentation is all about understanding your clients, thinking about who's going to be doing what work, thinking about the digital solutions available. And I think what we've heard so far, especially from Rob, he's experimenting with new tools. And that experimentation gives you, let's say, a little confidence in terms of the capabilities, understanding what works well, how clients interact with them, but also more importantly, basically start to create new habits with your clients without them actually knowing so. It's all about them getting to engage with you, share information on a regular basis. But also in terms of segmentation, it's your control sheet, whether you're going to be doing Excel or your practice management solution. Every one of your clients will have to be reviewed, repriced, and re-engaged. That's just it, that the factuals of it. There's going to be admin, bureaucracy, but also an opportunity, because I think we'd all love our clients to pay us a little bit more money. And when you've got a legislation change like MTD, it fundamentally changes the engagement. Who's doing what work, what taxes need to be paid in terms of the regularity of information, but also more importantly, resetting in terms of the relationship you've got with them, but also how your clients pay you. Because we'll touch on in a moment, it's the fact that the payment frequency will have to change. Clients will have to be thinking about how they pay you more regularly, which is another conversation. So we think about the planning around. It's technology, but it's also education, training, and awareness. One, in terms of colleagues, making sure they're really informed, but more importantly, how do you inform your clients about MTD? Because really, though HMRC will be performing marketing, you would want really HMRC to be, let's say, the stick of the process, and you're the person providing the solutions and the clarity of what your clients should be delivering. So we can see time spent hand-holding certain clients, but also time spent with maybe doing little events, whether it's with yourself or with technology partners. It's a case of that client segmentation is so important. So Sam, from your point of view, you've probably got a little spreadsheet, it's already managing it, but it's a case of those themes of work is so important to manage on a scale across your practice, isn't it?
Yeah, absolutely. Yeah, and again, all in the organisation, but all in the visibility as well. I think the easier you can get that, whatever method you use to see where you're at with this, the kind of easier it'll be further down the line. So whatever you're doing now is definitely going to help, because I think you're the only person I've ever heard that likes to put it into days, Chris. When you say things like, come this day, we'll only have 300 working days to go, that's like scarily close. And I do always remember a bit of a horror story of a practice that I went in on a consultancy role to do MTD for VAT when they'd left it far too late, and it was like scary, trying to get clients onto software with mere months to go, even weeks to go, can be really, really stressful for a practice. And I think the other side to this is, we have to try and find the positives. So the positives for the clients, well, we're going to have visibility into some sole trade clients that we've never had before. When they're wanting to know predicted tax bills, for example, we're going to be best placed to actually provide that. Clients that make mortgages that want predictions on current year figures at the moment that don't bring the books in until December, and you're thinking, well, how on earth do you think that I can, accurately predict that for you? Whereas this is going to give us, might not be 100% accurate, but it's going to be definitely a stronger insight into those final figures than we have at the moment. So that's kind of from the client point of view, how, we can almost try and push the clients early to get on board with going on to software. But also from a point of view, I think it is interesting how, yes, okay, there's going to be some kickback from clients when it comes to increased fees, but actually a lot of practice owners, from my experience of talking to various size firms, do have, let's say, legacy clients that can sometimes be on slightly lower fees than other clients, and they do have, pricing structures that maybe need a revamp, mine included. This is our opportunity to do it, because if you don't do it now, when are you going to do it? There's a huge change in place here. So I think from, trying to put a positive spin on this, I think that's something to bear in mind, that this is your chance to almost get rid of those clients that you weren't really enjoying working with, but actually find the best place to be working with the ones you do enjoy. And, even if you break even with that calculation, well, you haven't won and you haven't lost, but you've got a client base that are willing to work in the way you want them to work.
Yeah, thank you for that.
Sorry, Chris, I'd like to really reinforce that with what Sam said. I mean, for anybody that knows my firm, we've done a lot of acquisitions and built the firm largely on an acquisition basis. And there's a lot of legacy client pricing within our fee bank. And we've done that this year. An awful lot of this year has been exactly that, repricing existing work with a view to gearing them up towards the MTD, even if we're not talking about it as MTD. Because we're in the background looking at what we know is coming and what has to be done. We may not be saying we're doing this for MTD purposes, but it has, I would say we've exactly had what you said. We've increased we've lost some client numbers, but increased the overall fees. And truthfully, the client numbers that we've lost, we're not unhappy. I never want to lose any client ever. Of course you don't, but we're not unhappy with some of the ones that have gone, because you're like, they weren't the easiest of people to deal with for a variety of different reasons. And I would really reinforce that it's a fantastic time for practice owners out there to look at that legacy pricing. I think a lot of us have that issue, and during the times firms that I'm aware of and have dealt with in the past, during the times of almost no inflation prior to COVID times, a lot of us got a bit lazy on that, me definitely, and just kind of said, well, it's all about right, the 1-2%, it's too much aggro to deal with, and we're suddenly having to reprice to keep our own profitability going. And it's a perfect time to do it. You are segmenting, you're looking at the client, you're engaging with them, and you can have that conversation.
Yeah, it's the opportunity of a lifetime in terms of actually that reset button. Now, Rob, you did touch upon this, the fact that you've already reviewed your client base and thought about who's going to do what work. And I think from the client segmentation exercise, I think the fundamental honest question you need to ask yourself is, who is going to be doing the work? Because from, let's say, the analysis, you understand but not just the client's, let's say, ability to engage and work with technology, but actually, will they ever be bothered to actually do any of the processing themselves? And if it's a no, and you're going to do it, it's actually thinking about the right solution. And then from Sage's point of view, we are trying to give a plan, a solution giving everyone the choice of the best tools available. So whether that's the cloud bookkeeping tools, which are mobile as well as a browser, from Start to Standard Sage Accounting, those tools called Sage Individual, which enables you to actually sheet capture within the bookkeeping tool, multiple bank feeds, as well as a free plan, because obviously some clients may literally have 1 or 2 transactions and it may not be worthwhile, but you still want them to be digitized. But when it comes to those clients where you're going to be doing the work, this is why we've launched Auto Entry Accounts Prep, the ability to basically take information from bank statements, invoices, put it all to one place. It's basically Excel spreadsheet in the cloud, but super powered to basically have a uniformed approach in terms of how we're doing the accounts prep. So Rob, from your point of view, because I think you've been using it quite a bit and seen the gains from it, I think gains is the important thing. There's no point having technology unless you can fundamentally save time. And how has Auto Entry Accounts Prep saved you time in your practice?
Oh, humongously. I mean, I'm a massive advocate for this. We use it, we pay for it. This isn't a sponsorship thing that you guys do for me. I have used it from day one of Auto Entry, and the moment Accounts Prep was brought into me, I would love to have our client base, as Start and Standard. I'd love to have them all up there, but they're not. Who I deal with, this isn't any reflection on the clients. I love my clients to bits, but they are working people who, I couldn't install a bathroom, I couldn't install a kitchen, I couldn't build a brick wall. I have no skills in that regard whatsoever, and these guys don't want to be doing bookkeeping. They don't want to be doing stuff. They just want it dealt with. So something like Auto Entry, and then into Accounts Prep. The Accounts Prep stuff, when we used to have Auto Entry on its own, and we'd have to export it into an Excel spreadsheet and then mess around with it and turn it into something, your typical 35, 40,000 pound sole trader job would take us 3/4 of a day to a day by the time you're done, and that's including the Auto Entry side to it. I mean, back in the day when I was doing that on as a trainee on 12-column analysis paper, it'd be a week's work. But so that in itself was a massive time saver. Adding Accounts Prep into that, for me, cut that down into a couple of hours. We can literally take a bag full of stuff and turn it into a full-blown output in 45 minutes to 90 minutes using the Accounts Prep. It's a very powerful tool for practices to use if you're dealing with the sort of clients that I deal with that are compliance-driven, very incomplete records. And I think there's a lot of practices that do. As much as I'd say I have outliers, I've got big stuff, I've got those things, but and as much as I'd love to have everybody up in standard, they're not. That's what we do. I like the people I work with, and we try and move on those that we don't. But it's a really powerful tool. It's very intuitive, and you guys at Sage have listened as I've sort of said, well, what about this and what about that, and actually made it even better as we've gone along for accounting practices. So if you're in a firm that is going, yeah, we're going to end up doing most of this work here, I would honestly say to you, start, if you're not already using an invoice capturing system, please go out and use one. And it's amazing how many practices I've spoken to through various forums that still don't use any sort of invoice capturing, any sort of data capturing. I can't understand your cost base at this stage. Then link it on. If you're on Auto Entry, which has always been my preferred system. I've tried all the others. I've looked at all the others. I just prefer Auto Entry. If you're on Auto Entry, do look at Accounts Prep. It makes the job seamless for you. And then, as I say, I would shout out to then start linking that up to WhatsApp, because clients intuitively do use it, and that's been a real big win this year for us.
Yeah, brilliant to hear. Sam, from your point of view, you've been able to handhold most of your clients as you've onboarded them, and you've always, where possible, taken, let's say, a bookkeeping tool first approach. So you've been using Sage Accounting quite often. And I think for some of those who may be on the call thinking, well, my clients won't get on with these cloud bookkeeping tools, they've never really done anything before. Have you seen the benefits to your clients and be able to sort of invoice quickly, get paid faster? Then also fundamentally from your point of view, where clients are actually using the tools, does that make the self-assessment easier because you've got digital record keeping at source?
Yeah, absolutely. So you are right. The type of clients that I work with have often come back with, well, that's not what I do. I don't have, I don't want to sit at a laptop at the end of the day. But when we sell it to them that all we want you to do initially is do your sales invoicing, and actually, if you do it in this way, you can have that sales invoice emailed to the customer's house that you've just left when you've just, plumbed the bathroom or whatever it may be. Before you've even driven off, they've received your invoice via email, and it has a massive button that says pay here, which I can prove to you via statistics within the practice gets you paid quicker, because everybody loves a button that's easy to just click pay here. Of course, there are Stripe fees on that integration with Sage, but I tell you what, the Stripe fees are so worth that integration being so seamless. So actually the bookkeeping and the double entry and the bank charges and the payment towards that invoice is then recognized in the bank feed. This is just one example of, to try and sell that to the classic personality type that's a tradesman, let's say, is quite difficult until you show them. And that's always been the key for me. It's always been about whether it's show them in the office or make videos. So I'm a big advocate for, wherever possible, physically show them. And actually, once you show them that there is an app that they can use on their phone, which is in their pocket anyway, the direction of the conversation usually changes. And it's the same with auto entry when it comes to snapping receipts. And I know Rob touched on this before, the fact that, again, we're picking on the tradespeople, but that's because classically they're not sat at computers and often don't own a laptop, but they all have mobile phones that they're constantly on. And I think it is about changing habits with clients, but actually when you show them how easy it is and what the benefits are for them, once they think, oh, do you know what, I am getting paid quicker, that is your absolute selling point of these solutions. Sorry, Chris, I feel like there was a second part to that.
No, that's absolutely fine. We'll keep it as there because I think I'm conscious about time. But also I want to touch on a subject I think no one's really spoken about yet, and that's about pricing and actually how do we approach this as well. So let's just bring a few facts to life, or actually tell a bit of a story. So when we think about making tax digital, yes, we've got to monetize it properly because it's the right thing as a business owners, as accounting firms, but it's also going to be disruptive. So when we think about the disruption, self-assessment, as we know, it's going to change. So we're going to be doing 24, 25, we know, we do the work, we bill it, we get paid. We then come to 25, 26. So this is the year ended March 26. We'll be doing the work in the summer of 26. We'll do the work, we're going to bill it and get paid. This has happened for 25 years. However, with MTD, we're going to be doing work not in a single point in time of the year, but throughout the year from April 26. So naturally, we should be rewarded because we don't want to do all this work for 12 months and not get paid. It's not the right thing to do. So we need to try and get our clients to change their ways in terms of how they remunerate ourselves. Also, if you've got software bundled into it as well, that's an additional cost which needs to be factored in. Then also it's a case of that MTD isn't just a once in a lifetime theme of work, it's a continuous theme of work. It'd be a continuous streamlined approach in terms of how you're delivering services. But when you think about that summer of 2026, people talk about increasing fees for doing the work, but take a step back. You will be doing twice as much work in one period because you'll be doing the 25, 26 accounts as well as doing MTD in the same period. So yes, whether you're using technology, you can do it faster and more efficient. Fundamentally, your client's going to feel the brunt of it because you're going to bill them twice and get you paid twice in the same period, even though it is for two themes of work. But also you've got this other theme as an accounting firm, especially those who are trading as a limited company. Because you may not be aware, there are changes in terms of, let's say, the reporting regulations. And then from January 2026, if you're trading as a limited company, as an accounting firm, you then now need to actually think about the deferred revenue, your obligations of work done. So even if you're in a position where you get your clients to start paying you on a monthly basis from April 26, so let's just say £50 a month, you'll be in the situation when you get to your year end being March or April, you've received all the money, but you've still not done Q4 and you've still not done the tax return. So therefore, suddenly you're going in a situation where you're billing your clients once and it's accounting for that's easy, to now actually billing all your clients monthly, receiving money monthly, but then also having to do the deferred calculation. So when we think about monetizing MTD, it's a couple of things. One, in terms of landing the idea that your clients should be paying you monthly and not annually because the work will be continuous, but also advising clients in terms of how they can start catching up with you and having those alignment fees. And then, like everything, it's the back office work. The back office work is how are you going to account for this deferred revenue, not for one client, not 50, maybe 100 clients. So therefore, it's making sure you have the right systems and actions in place for your practice. So Rob, I touched on this when I met with you a couple of months ago. And how did that land in your mind? And what have you been thinking about how this should be worked upon?
How it landed in my mind was actually to do with the mergers and acquisitions that we do. I mean, my own practice, I don't believe has a significant issue with this because of the way the deferred revenue side to it, because we already recognise deferred revenue. But because of doing a lot of M&A work, anybody and looking at a lot of practices, anybody that's looking to exit in the next couple of years really needs to give this thought, because you could walk in, if you've got a load of deferred revenue suddenly in your firm that you haven't properly recognised and haven't sat there or something, you could be walking in and finding the capital value of your firm is basically non-existent. And I have seen this in reality. A guy was getting paid monthly for doing all the work. He had basically a year's worth of income that he'd received, hadn't done the work for, and expected to now sell his firm to me for one-time fees. And you're going, well, in this first year that I take over, I'm going to get paid nothing. So I'll take the firm off your hands, but I'm not giving you a penny for it because you've already had it. That really crystallized in my head from talking to it. The billing twice part is something that I haven't yet come up with a solution to, because it is going to be a problem, and we are going to have to go through and carefully explain that. It's not just going to be pumping out new proposals on Go Proposal to clients, because if we do, they're going to be, what on earth is this, and why am I paying you twice? We've got to explain it properly, and I haven't yet properly come up with a way of doing that. I'm hoping Sam has, because she normally has some great ideas that I'm listening to as we go through this.
No pressure, Sam.
Pressure at all. No, I haven't planned it exactly how it'll look either, Rob, I'm afraid. But the way I see it is that these clients, we kind of need to tread gently wherever possible with them. And I think for me, there'll be a transition year, which will probably be a bit of an administrative nightmare internally for doing billing, but actually to stagger somehow within that first year. But then going forward, this is how it'll look. And I think that's in my mind how it's going to have to be. I think otherwise you would be at risk of, of a bit of a slot in a respect, because they'll think that they're not going to believe that, no, this is going to be happening everywhere. It's always the grass is greener.
Thank you very much. So I'm conscious about time, because I said it was going to be a short webinar, and thank you for the hundreds of you for attending today. So really, I think the actions are quite clear. MTD is happening. It's really important to have a conversation with your clients, because HMRC will be contacting them as well. It's really important you have a plan in place. That client segmentation is a priority, because you don't know what the problem, the challenge, or even the opportunity is until you understand your actual client base in real detail. The other insight is there are options and there are choices in terms of how you can work, whether you do it yourself, whether you get the clients to collaborate. There's a piece of technology to help you each step of the way. And when you think about help and support, that help and support comes in a whole myriad of different faces and guises, whether it's from your colleagues, reaching out to fellow accountants, because I think the peer help and support available in the industry is top notch at the moment, but also more importantly, reach out to institutes as well as your friendly technology partners, maybe Sage, because we hopefully will have all the technology, but also a few more ideas, because things like monetizing it and thinking about pricing and guidance, we're going to be talking about this in more depth from February once we've got beyond self-assessment. So with that done, I just want to say a huge thank you to Sam and Rob for participating in today's webinar, giving their expert guidance, advice and experience, and also their bright ideas. So hopefully see you all again soon, and very much so in terms of the new year, in terms of other events and roadshows and webinars to help you on this journey of making tax digital. So thank you all and have a great day, and hopefully this season will be easier for you, especially next year. Thank you very much. Goodbye.